Here we have a trade review of ticker symbol META. This is Meta Platforms. This is what, as far as this used to be Facebook, FB. Used to be the ticker symbol. It has changed to, I guess, Meta Platforms is now, I guess, the parent company of Facebook. Not really sure how all that works, but it used to be Facebook. Now it's Meta. And this one popped up on the scanners the end of yesterday. As usual, we always check the scanners at the end of the day and saw it right there. And it's fairly obvious what's happening right here is we have a double bottom. We have a low here, a high, and the next low matches or gets very close to the previous low. And I will zoom in on it in just a second. Just wanted to show one more thing. The only thing that somewhat gave me pause originally when I first looked at it was looking at this downward trend right through here. However, the trend line, we're still a long ways away from that trend line. But that's the only thing that kind of gave me pause was that we are in a downtrend. However, I did choose to put it on the watch list and we ended up trading it. So let's zoom in and get rid of this trend line. All right. So we have a low here and the next low, I mean, it's not to a T. The low is 154.25. The low right here is 155. So we were about 75 cents away. But on a stock like Meta, that's 75 cents is nothing. It can move that easily in a few seconds, depending on the volatility. So anyways, I definitely considered this to be a double bottom right through there. And we'll draw it in just so you can see. So that's roughly where it's at. And when it came up on the scanners, so it meets the criteria for this particular setup was a valley to river setup, and it also had good solid support. It's minor support, however, well, technically it's a yearly low, so it's major, but it's so recent. I personally had this as minor support still. I had it written down as the bottoming at the 365 low. However, looking at the chart, I considered it and how the chart was playing out in that downtrend. I still kind of consider this to be minor support, but combine that with a chart pattern of a double bottom, and I did feel confident taking this long if it were to get triggered, which it did. So the trigger, we were looking for a break of 168.25, and this was discussed in the war room before the market opens. So what that means is when I say I need to see it break, I need to see 168.26 print. That's what I needed to see, and we got that. We got it very early, and when we get into the 1 minute, I'll show you how exactly I ended up trading it. But we did get the trigger very early. We had opportunities to enter the trade. So as usual, and I say this in a lot of my trade review videos, is that up to that point, everything is already predetermined for you. You know, I give you the watch list, or my members the watch list every night or every afternoon. And then in the morning, starting at 9 o'clock in the war room, we go over that watch list and discuss which stocks we want to move to an active watch list and which ones we plan on trading if we get the opportunity. And this was one of those that we planned on trading, and we did. This was actually my number one stock of the day. It didn't end up being the most profitable, but it was the one that I was watching the closest. So I really like this, is basically what I'm trying to say. So everything's predetermined. The only thing you really have to decide is when you want to exit. And I always go over 3 different exit strategies in these videos. But I want to be clear that these are not the only ways to exit a trade. There are, it's so dependent on the trader and what your style of trading is and what you enjoy doing and kind of just fitting your personality. And if you're, typically, I guess if you're kind of laid back and, you have more of a detail-oriented mind, you might be fine with holding on to a trade. Or holding it, I'm not saying like swing trading. You could definitely do that, but I just mean holding on to it longer during the day. If you have a mind or a personality where, you're fast paced, you like things, you like to constantly be doing something, you might be more of a scalper. Uh, you just have to decide what works best for you and what exit strategy you enjoy best. So the three that I'm going to go over are just giving you some ideas, some examples, but I want to be clear that they are not the only three ways to exit a trade. So the first way we'll go over is exiting fully or begin scaling out into a previous area of support or resistance. In this case, since it's a bullish play, we're looking for resistance, overhead resistance. And the first obvious one would be right there. And that would be creating kind of a double top. That's definitely an area or recent area where price bounced at. So, and we can look left even farther over here and see that that area right in there, that's a pretty decent area, pretty solid area to take some profit to exit the trade. And if you had it, drawn to a T that high, you can look up here and see it. That high was at 171.75, and the high of today was at 171.59. So we got very close to that level. That would have been a pretty good area, general area to begin taking some profit. If you had done that, you essentially could have just about nailed the high of the day, depending on when you got filled and when you actually executed the trade. And again, I always say this for me, if you choose to exit fully, fine. It actually would have worked out perfectly in this situation. If you choose to begin scaling out, it's completely up to you. But what I would prefer to do is to exit most of my position at the most recent area of resistance in this case. So at this point for me, I would exit, 2/3 or 3/4 of my position and then hold the rest till it either gets to the next area or till the end of the day. But once I do make that first exit, go ahead and move my stop to my entry, or to the low of day. It's kind of your call, but you want to limit how much damage that what you have, the shares that you have remaining. You kind of want to limit the damage that they can do to your profits since you've already made some money. So go ahead and move that stop. That would be a good idea to do. And if you did that, the second area would have been for me, what I was looking at was this right here. And no, it doesn't look like much, but if you've been trading for any length of time, you know the importance of gaps and how much they almost need to be filled. And we did have this gap down right here. And even after today, this gap has never closed. So this would have been the second area that I was watching, was to see this gap get filled all the way up to the close of this candle. It didn't happen. Now, if that was the case, if that was you, what you could do in that situation is, no matter what, close the trade at the end of the day. If you didn't get stopped out, if the price doesn't come back to your entry. So you can either close it out at the end of the day, no matter what. You can turn it into a swing trade. You can, even if you closed out before the end of the day, just to take the profit, that would have been fine too. That would have been your call. But it just gives you some ideas on how to exit right there. The other way of trading this, for example, would have been when we trigger, enter the trade, and set your stop that we always go over in the war room. I give you what my stops are. Set your stop and go from there. Just let it ride and exit at the end of the day, no matter what. That avoids any overnight risk. It also allows you to capture some really big movers. It will, from time to time, turn a winning trade into a losing trade, but that's just the nature of the beast. When you do it this way, your average winner will increase, because sometimes you will catch a big runner at the end of the day, and it just works out perfectly. Sometimes, however, price will go up and then it'll come back down and you end up losing money. But your average winner is increasing, so you don't need to win. You don't need to be right as much of the time, because your average winner is increasing. So on this one, it doesn't look like much, but actually it was. I know this was about, just imagine whatever your risk was, your maximum loss. Let's just say if it was $1,000 on that tiny little bit right there, you would have made a little over 100. It was about a 10% or a little bit more than 10% uh, of your max loss is what this turned out to be, because that's how I ended up trading this one. So I know for me, my max loss is not 1,000; it's a little bit more than that. But anyways, so that's how I know that this was a little over 10% of a max loss. That's what this turned out to be, and still worked out fine. It was a base hit type of a trade. That's what we're looking for, and if we catch the home run, fine, that's great. Now let's look into scalping, and I'll kind of show you and go over with kind of what happened. So early in the morning, let me zoom in even more. Early in the morning, remember our trade, our entry or our target was at 168.25. I say our target, our trigger, excuse me. So right there is where you needed to see price break that level, and it did very, very quickly. In fact, it did it so quickly that I missed it. I did not get filled. Or not even, I didn't even execute a trade because it kind of just rocketed past it without really, I didn't really have the opportunity. If you got in that first minute, fantastic. That's awesome. I didn't, I missed it and it slipped on by. So instead of chasing it, all I said was, you know what? We've already triggered and I'm not planning on scalping this per se. So I'm going to wait till price comes back to me. And when it comes back down, then I will enter. And that's exactly what happened. Price went up, stayed up here, opened right there, kind of pushed up a little bit. Then as it came down, and I actually, to be honest, I got a really, really good fill. I was looking to get filled, the break, or at this point now I'm wanting to see it come back to 168.25, and actually got filled at 168.05 way down here. So it worked out really good. And let's just say if you are scalping, and for me, if I was scalping, it would have worked out, really good. It would have worked out fine because within the next minute, we were up, what's that high of once? So 90 cents, technically 89 cents. Could have got 89 cents in less than a minute. And that's fantastic from a scalping standpoint. If you did exactly, if it happened for you exactly how it happened for me, would have been an easy, quick and easy scalp. Now, on the other hand, if you did get filled right here at 168.25, or let's even say 168.30 in that range, well, it's still the high in that same minute, 168.97. So you still would have gotten anywhere between 60 to 70 cents, which from a scalping standpoint, that's usually pretty good. You get 60, 70 cents as a scalper, and you're looking to be in and out fairly quickly. That's a good trade. So this one, scalping, you really had two pretty good chances to make money on this one. After that second chance, you either would have been stopped out, or you would have had to do kind of take a step back and not scalp it. And really the only way you could do that was if your stop was using the stop that I recommend in the mornings, because then your risk would have been controlled and you really never would have been in much danger on this particular trade, because it was a small mover on the day, or relative to what it usually is. However, if you had a tighter stop with bigger size, you probably would have got stopped out on this move, or even this one down here. But before all that happened, there were two chances to make money on this trade if you're looking to be in and out pretty quickly. So that about wraps this one up. Turned out to be a really good trade. Very happy with it. Very happy with how it turned out. Again, it's just a small, even from this zoomed out view, you can see how small of a candle that was, and that's all we need. If we get anything more than that, we're thankful, truly thankful. But we're not looking for home runs. We're looking for base hits. But sometimes you make a base hit swing and the barrel of the bat catches the ball just right, and you hit it out of the park. Happens from time to time, but even on trades like this, we're just as happy. So again, thank you for watching. Hope you're able to learn something. If you will, please like, share, and subscribe. I would really appreciate it. Thank you again, and God bless.